Good afternoon, dobar dan. Let me start the first session of, we remove the mask now. Let me start the first session, the first panel of this year conference. As you know, the conference that is usually taking place in March in Kopaonik is now taking place in Belgrade in May. These are the only changes. The only other change is that we now have a room with small representatives and hopefully unlimited audience that is following us via online devices in Serbia and worldwide. Our first panel is about developments in the Western Balkans, the current situation, the challenges of the COVID crisis, the recovery, the policy measures that were taken thus far, the challenges going forward. We have three distinguished panelists with me today. I don't know in which order to start, but let me start with our online representative, Jasmine Chakeri. She's representing the World Bank, and she's joining us via video from Vienna. Then we have Rika Ishi from Ebrd. She's now regional representative of the Ebrd, stationed in Belgrade, so we're lucky to have her both physically and mentally present. And we have Sebastian Souza, who is IMF resident representative in Serbia, also here with us. Without much ado, let me start by basically asking our participants to give us the first insight into what they believe were the developments over the last 12, 15 months. What are the main challenges and how do they see the situation going forward? And then we will, following the initial 5-minute remark by each participant, we will have a follow-up round of 5-minute additions, comments, discussions, questions, hopefully some dialogue. Since we have a small group of people, despite the very tight schedule that is imposed by the format of this conference, which is 1 hour exactly, we will have the 2 rounds of 15 minutes plus this introduction. That should probably take us to about 35, 40 minutes, and then we'll have about 15 minutes for interactive actions between the participants and the audience. We will not be taking live questions from the audience outside of this room, but we will convey some of the questions if they are communicated to us through SMS messages or other ways that are convenient. And we will take questions from the audience present here in Hotel Metropole. This is the new happy development that we are now allowed to have 30, 40 people in the room. Hopefully we'll have the same type of attendance in the forthcoming sessions. As you know, we start today on the 24th and we go for 3 days. The format is pretty much the same as it was in previous Kopaonik Business Forum events. With this, my question to ladies, which one of you would like to go first? Rika here. Jasmine, you have the privilege, online privilege of going first. Please, go ahead. Jasmine said that she was going to talk about the regional report for the Western Balkans and the issues that come to her mind regarding that report, the diversity across countries. I think that the IMF we take differentiated approach across region and across countries applies here as well. So Jasmine, please.
Thank you very much. Good afternoon to everyone, to my fellow panelists, to the moderator, and everyone who's watching in the room and online. It's a great pleasure to be here and participate in this very first panel of this year's forum. As was mentioned already, the World Bank published its semi-annual report for the spring of 2021 just a few weeks ago. It's the regular economic report for the Western Balkans. And the title is Subdued Recovery. And I think that's very much a theme that we see in the Western Balkans, but probably in many other countries in the world. The Western Balkans, like everywhere else in the world, was very much affected, of course, by the crisis, both from the demand and the supply side. I think we see an average decrease in economic activity in 2020 of 3.4% for the region as a whole. But that, of course, masks a great divergence from minus 15% in Montenegro to -1, which was the best performance in the Western Balkans and Serbia. And we see very clearly that those countries that are more exposed to tourism, which was, of course, affected by the restrictions on movement and on travel, those countries were much more affected than other countries. We also see that there was a great variety of government responses to cushion the impact of the crisis on the economy and on households. And that also contributed somewhat to the depth of the economic recession in these countries. Of course, the 3.4% decline in the Western Balkans still compares relatively favorably to some other countries in the Eastern Europe region. For example, the EU has an average of -7. So the Western Balkans in that sense did better than some other countries in the neighborhood. And for 2021, we foresee a recovery of around 4.4% and then 3.7% from 2022 onwards. So even with this recovery, this subdued recovery, we will still be below the pre-COVID trends that we foresaw before the crisis happened. And there still is a great amount of uncertainty, of course, to the outlook. There's also, I think, still a lot of and not only uncertainty on the global context and on the global recovery, on the vaccination rollout, but also to the amount of scarring that the economies in the region will have experienced. This will only be seen once we come out of the crisis, once the support measures are withdrawn, and once we see what the real impact of the crisis is on the economy. Just to take an example on labor markets, for example, what seems at first sight maybe as good news, which is the fact that the unemployment rate actually declined in the Western Balkans from 13.5% in 2019 to 12.6% in 2020. Actually, when one looks a little bit deeper, it's mostly because of an increased inactivity and people exiting the labor force. We still have about a net losses in the Western Balkans, even with the beginning of the recovery in 2020 of about 70,000 jobs lost. And this is already better than would have happened without all the government support, which, through wage subsidies, through other support to companies, tax relief, guarantees, credit lines, and so on. But what we see here on the job loss side, and I think this is something that could indicate some scarring and will take some time to recover, is that the most vulnerable segments were also the most affected by the job losses, and that includes women. The female labor force participation rate has fallen, but also youth. And youth unemployment in 2020 went up for the first time in 5 years in the region. And in 2020, every third young person of working age was unemployed. So this is something that will linger for a while. This is not something that will go away with the recovery, most likely, not immediately. And that will require specific support to ensure that there is a recovery also in the labor markets. We also see, for example, the number of poor people increasing as a result of the crisis by about 1.1 percentage points. That's about 165,000 people in 2020. Of course, some of these numbers look better for Serbia, but worse for other countries. So these are all regional averages for the Western Balkans. Maybe the one last point I want to mention is, the room for further support from governments for the recovery and beyond for the medium-term agenda will very much also depend on having fiscal space to do so. And here we clearly see a reduced fiscal space as a result of the measures that were taken to combat the crisis. The fiscal deficit surged to an average 7.8% in the regions, unweighted. And public debt levels rose in some cases to historic highs. So there is going to be a big agenda to recreate this fiscal space through a certain amount of fiscal consolidation when and if we are out of this crisis and the recovery has taken hold. Not immediately, but when we can see the first signs of a sustainable recovery. And so this is, I think, a big agenda for the Western Balkans countries to continue supporting the economy, but also continue growing in the medium term in a sustained manner.
Thank you. Let me just ask you one follow-up question just to make sure that we all get those points. The bank was very active in monitoring the impact of the COVID crisis on the number of people below poverty line and into people below the extreme poverty line. Worldwide numbers are 88 to 100 million, the latest World Bank numbers. Question is if you can comment on those numbers for the Western Balkans, and B, what do you think can be done? You mentioned the women and the youth and the coincidence of their location and the heaviest hit sectors. So we have the most vulnerable group and the most hit sectors coincide. What can be done immediately to do that? And how does that refer to the job retention efforts that are part of the overall fiscal efforts by many countries, including the Western Balkans?
Right. So the job retention efforts, I think, were very valuable, as I mentioned. Of course, the extent to which these efforts could save jobs depended on the size also of the support, which varied a lot, as you know. In some countries, like in Serbia, the support was very extensive. In other countries, it was less so because there was not sufficient fiscal space to do that. One should also remember that the jobs that were saved were primarily formal jobs, and also a lot of the support that went to households was through the established social assistance systems, and so there were a lot of people that fell through the cracks, either because they were informal workers or because they were not beneficiaries of or were not registered as in the social assistance programs. So a lot of people were not covered by this support. And so you would expect then that the most affected then were also those that were in the informal sector, those that didn't have access to programs and to formal government support. This is then also reflected in the poverty numbers and in some of the employment numbers that would include informal employment. So I think the agenda here is to also, again, once we come out of the crisis, have a look at the social safety net to make sure that it really is as comprehensive as possible to capture some of these people that would otherwise fall through the cracks. And also ensure that, and this is actually one of the focuses of this year's regular economic report for the Western Balkans, is to take efforts to reduce informality. Informality is still a big problem for the Western Balkans. It creates a lot of issues also for formal firms in terms of unfair competition and other issues. But I think the crisis very much showed that when you have a large informal sector, you also are much more vulnerable to crises like COVID.
They're not eligible for the standard channels of supporting them. Thank you so much. Let me ask Rika to step in and comment on in the context of what has been going on worldwide and in Europe. What is the particular EBRD view on the problems? How deep they are? Perhaps in the second round, we'll talk about the specific instruments that are being contemplated or being used. But for the first round, if you can tell us overall, what is your take on the depth of this crisis, on the disruptions that it has created, and the way you approach this problem regionally?
Thank you. Is this on? It's on?
I think it's on. I think they control the microphone.
Thank you, Dusan. I'm actually very new to this region. I had been assigned to Belgrade early April, so I come with a bit of a fresh mind. And one thing that struck me, Jasmine said correctly, the economic performance among the countries differed, but overall, I think the region did much better than what EBRD forecasted in September last year. In fact, we forecasted the region to contract by 5.1%. September, we were not really sure, but in reality, it was only contraction of 3.1%. So, my first impression was that the authorities here did things quite well. Now, again, there are divergences. For example, Serbia, I think, took really decisive, very strong steps in terms of fiscal response, whereas other countries did not manage, but still, the overall, apart from Montenegro, most of the countries' economic contraction was much less than what we expected in September last year. So my impression is, wow, the region did relatively well. Now, I think this year, when I observed the policies, I think what again impressed me the most is that even, given the uncertainty, there is a risk that policy reversals would actually, premature policy reversals would actually be negative for the economy. And again, I think the authorities in the region are very aware of the risks, and they're very cautious in not trying to reverse. And again, Serbia, including Serbia, the authorities are taking continued measures to ensure that the economy would come back to the more sustainable path. So this is my first impression. Thinking about a little bit about the risk, I think Jasmine mentioned about the fiscal space. I think when you look back, again, there are divergences. Each country is not the same. But a lot of countries, before the COVID, actually had a bit of fiscal space to be able to respond to the crisis, such as COVID. So they were in a relatively good position. And also, I think globally speaking, because of COVID, a lot of governments have been adopting very loose monetary policy, and there has been a lot of global liquidity. And what, again, impressed me most was that the countries actually took advantage of this loose liquid situation to tap the international capital markets so that they actually have sufficient funding to be able to support the fiscal needs of the countries. Again, now looking forward, I think what we need to be a little bit cautious about is when this fiscal or like a monetary easing around the world, the enormous amount of liquidity, when this would start drying up. However, I'm not that concerned in the sense that all these countries who did raise funding from the international capital markets had been regular, issuers in the market. So unless something goes really wrong, I think in general, the countries would be able to continue to tap international capital markets to be able to finance their fiscal needs. And I'm sure Sebastian would have something more to say on this later. Another impressive thing I observed was that all these economies actually came, when you have a crisis situation like this, one thing that you would worry about is the banking sector. And again, I think all Western Balkan economies came into crisis with actually restored banking sector after the 2008 financial crisis. The capital adequacy ratio is quite good. And of course, the NPLs, non-performing loans, are stable, not increasing. But of course, looking forward, once the moratorium on repayment, etc., would finish, I think we need to be slightly careful about how this would impact the asset quality of the banks. But again, I think the banks are in relatively good situation, and a lot of countries actually have established deposit guarantee schemes that could be utilized if, let's say a small bank runs into trouble. They are capable of addressing this. So overall, I am quite optimistic about the region. And Jasmine mentioned about scarring, and I would leave how the EBRD is going to respond, but let me tell you one thing. We are in discussion, for example, in the banking sector, with discussion with the authorities. I think this deposit guarantee scheme is really good instrument to support the recovery when in an environment when banks are feeling a little bit risk averse. So, having such scheme, I mean, Serbia has it. We are supporting Bosnia. We are talking about potentially setting up such scheme in Montenegro. I think this is a very good instrument to also increase confidence in banks to be able to lend to the real sector going forward. Let me stop here.
All right, we'll save some of the issues for the second round. With this, I think we do have an opening challenge for Sebastian regarding the fiscal space, the various IMF reports from the global one to the regional ones for Europe, and the most recent take on the Serbian economy. So we look forward to your comments on this.
Thank you, Dusan, and let me first also thank the organizers for the invitation. It's always a pleasure to participate at the Kopaonik Business Forum, even in this new format. So let me focus my first intervention on recent developments and outlook and some of the issues that Dusan referred to. In general, I would say that the Serbian economy has weathered the pandemic relatively well. So if one look at the economic contraction in 2020, it was among the smallest across Europe, only a GDP decline of 1%. This is, as Jasmine mentioned before, lower than the average for the Western Balkan regions, but it's also significantly lower than the average for emerging Europe, which declined by about 4% in 2020, and of course, even lower than the much larger decline in advanced Europe of roughly 8%. With this, I would not say that the impact has been small, right? Because we should also take in mind what we were projecting because the pandemic started. So we were projecting growth of 4% in 2020. So if one looks into it in this way, you could say that the reversal from +4 to -1 is still significant. But of course, relative to the decline in other countries, one can say that it has been milder. Also, looking at the impact on the labor market, the impact has not been strong. So in particular, focusing on employment, employment has remained pretty much stable through the pandemic, except with, as Jasmine also mentioned, except if one focuses on informal jobs, where we have seen a contraction, especially in the second and third quarter of 2020. So we have seen, fortunately, some recovery towards the end of the last year and the first quarter this year. But overall, the labor market has been faring relatively well, also supported by the job protection measures put in place by the government, as was mentioned earlier. So why Serbia has weathered relatively well in terms of economic activity compared to other countries in the region and more generally across emerging Europe? I think there are a number of reasons. One is the stronger carryover that, with which Serbia entered the crisis. So if one looks at the very strong growth Serbia was sort of seeing in the fourth quarter last year of over 6%, and also in the first quarter of 2021, 2020 of over 5%. This, of course, brings a strong carryover into the pandemic. And this carryover was twice as much as the carryover for the average emerging European country. A second factor, I think, is the structure of the economy. So a relatively small share of some of the sectors that have been hit hardest, like tourism, and a relatively larger share of other sectors that have not been affected that much, like agriculture and agro-related industries. And finally, as has been mentioned earlier by my co-panelists, the very large fiscal and I would say macro policy response. I mean, on the fiscal front, the fiscal package amounted to over 9% of GDP, and this included not just measures to increase healthcare spending, but also labor and social security taxes deferral of corporate income taxes, some minimum wage subsidies for SMEs, and also universal cash transfer. So all of this supported demand and economic activity during the pandemic. But I would also, in addition to fiscal policy, would like to mention monetary and financial sector support policy. So monetary policy remained accommodative through the pandemic with, let's say, 3 consecutive policy rate cuts, and also with the central bank injecting liquidity into the financial system. That proved to be very helpful, especially at the beginning of the pandemic. And also the adoption of the state credit guarantee schemes for bank loans to SME. That also proved to be very useful to make sure that credit continued to flow from banks to the corporate sectors and to households. And finally, the moratoria of repayment of bank liabilities. The original one, the second one, and the extension into a third moratoria have also, of course, provided support to companies and households. So after this large policy response, the fiscal deficit increased to almost 8% of GDP in 2020, and public debt increased, and reversed this declining trend observed in previous years. So it increased to 58% of GDP. And I would like to mention that financing was not really a binding constraint, even though there was this need to finance this large support measure. Except for for a short period of time at the beginning of the pandemic, let's say in April and early May, where the financial conditions became a bit tighter for emerging markets as a whole, and Serbia also in particular. So Serbia was able to Serbia and other countries in the region were able to tap international markets again. In the case of Serbia, with the issuance of Euro bonds amounting to 3 billion euros, first in May, later on in December. Of course, as a slightly higher yields compared to the issuance in 2019, but still at reasonable yields. And again, early this year in February, there was a third issuance at even lower yields of 1.6% and longer maturity, 12-year maturity. So overall, I would say that financing was not a big constraint, despite of the large increase in gross financing needs. Shortly on the financial sector, I share what my co-panelists mentioned. The banking system has remained well capitalized, very liquid, and the level of NPLs remain at historical lows. Of course, supported by the moratorium and by the new partial state guarantee scheme to provide loans to SMEs. And shortly, let me talk about the outlook. How do we see the outlook in this context? So in the first quarter, we have seen a recovery that was a bit stronger than we expected. So preliminary estimate for GDP growth in the first quarter amount to 1.2% of GDP. So this is already above the pre-crisis level. So this already provides a high base for the year as a whole. And in this regard, and also taking into account the adoption of a supplementary budget, which was adopted in April, envisaging additional support measures to households and companies, and amounting to about 5% of GDP, and also taking into account the extension of the bank moratoria and the extension of the previous state guarantee scheme for bank loans for SMEs. We have revised, or we are revising up our projection for this year from 5 to 6%, and then converging over the medium term to our potential growth estimate for Serbia of 4%. Having said that, we still see high risks to this baseline projection, in particular coming from the external environment and from external shocks. One is, the uncertainty that we still see regarding the future course of the pandemic, not just here in Serbia, but also in some of the key trading partners of Serbia. And also, some uncertainty regarding the potential delayed effects of the pandemic on corporates, banks, and households. I mean, one still needs to see what happens once all these support measures expire. So I'll stop here and then talk about policies maybe in the next round. Thank you.
All right, thank you so much. Let me then go back to our first participant in this discussion, Jasmine. You mentioned from the World Bank point of view that it's critical to have sufficient fiscal space to continue to sustain those policies until the time is right to move beyond the crisis. And this poses two questions. One is, what do countries that are more constrained in terms of the fiscal space, what countries can do in the immediate period while they wait for all the crisis elements to subside, that we are certain that we are out of the dire straits and we are out of priorities that are dictated by the health sector and the immediate dangers. Second question that comes to mind is what is the World Bank doing and envisaging for the medium term? I understand that the bank is in the process of redefining the medium-term strategy or building up a new strategy for Serbia without going into details. What are the main ideas? What are the key challenges as you see them being addressed going forward? Most of all, what are the ways of overcoming some of the labor market potential hidden and open disruptions? Some of the jobs being currently retained by the flat fiscal policy will turn out to be not sustainable in the longer run because sectors might change, because the demand might change and so forth. So what can the bank do to help move from the job retention type of policies to promotion of active retraining, restructuring, and directing labor supply towards the future needs of the industries affected by the fourth industrial revolution, by the innovation and automation that is happening worldwide?
Great. So on the question on fiscal space, I think this is a very critical question because we're not out of the woods yet on the crisis. So, and I think one thing that we've learned from the global financial crisis is that support shouldn't be withdrawn prematurely because that could have the opposite effect. So I think in the short term, while the economy requires continued support, I think the most important thing is to ensure that this support is targeted to those sectors or to those companies that need it most. I think at the beginning of the crisis, most countries felt that it was better to just provide support, even if it's not targeted, if it's across the board, even if some companies get support, they don't need it, then take too long to figure out what are the most vulnerable segments. So I think there was a prioritization of broad-based support over targeted support, which made a lot of sense at the time. Now that we are in a situation of very scarce resources, the targeting becomes more important, the efficiency of the support. So I think that's probably the priority number one for those countries that have systems in place to identify companies and sectors that need the most support, to do that so that the scarce resources go to the right places and not to those that could perhaps already, they may not have needed the support in the first place or that could recover on their own means at this point. On the more medium-term issues, and maybe not speaking so much for Serbia, you're right, we're preparing a new country partnership framework, but maybe speaking more broadly for the region, I think there's a big agenda to tackle a lot of the structural issues that were already there before the crisis, but that got amplified through the crisis in many ways. You mentioned the issue of skills and labor markets. And I think here, going back and looking at human capital formation in general is very important. In our regional report, the ECHA regional report, there was a very interesting statistics that by 2040, 1/3 of the global labor force will have had their education disrupted by COVID. So this is going to be critical that all these children that are currently in school that lost education in the short term will be affected by it in the long term when they enter the labor force and have jobs. So looking at what is needed to improve access and quality of the education system will be very important, of the primary, secondary, tertiary, but also the vocational training that you were talking about a little bit in terms of giving young people the necessary skills for the new economy. The other important investment that I think this crisis has made even more important is in digital development, in the digital transformation of the economy. Those firms, and this is shown in the various surveys that were conducted last year during the crisis, those firms that were able to switch quickly to online or that already had online capacities generally did better during the crisis, and that doesn't come as a surprise. So investing in digital capacities, in the overall digital infrastructure will be very important for the region, and also in digital government to ensure the sustainability and the continuity of government services and the accessibility of those for citizens. So I think between the human capital strengthening and the digital development agenda, those are two of the components for the medium term that are very important to invest in addition to, I think, a long list of other improvements to incentivize private sector investment, which will be even more important as public sector investment may be very limited in the short term because of the fiscal space. So incentivizing private sector investment through improvements in the business climate, improvements in the rule of law, and in improvements in the competition environment and so on. So I think that's a very complementary agenda that was already important before the crisis and continues to be so after.
Thank you. Let me then move on and ask a similar set of subsequent questions to Rika regarding what EBRD is doing in terms of helping countries address the issues going forward, in particular not only the digital economy, but also the smart investment for the future, and why and how do smart investments in those areas that connect the environment and the future structural change with the potential for growth. Why is this now becoming so important, and why is this now, as we were discussing before this panel, is becoming so topical in countries, in Serbia definitely, and in many countries in the region, that people realize that environmental impact is not just something that is discussed, but something that affects the quality of life, especially in big cities, and how can it be weaved into the programs that EBRD is supporting?
Thank you. EBRD is now really focusing on establishing green economy, not only in Western Balkans, but throughout our countries of operation. I think, in our view, we were already quite active in energy efficiency and also tackling climate change before the crisis. But I think the global environment has moved much more rapidly towards their resolve to tackle climate change issues. And we are also committed to address this issue. Now, what does it mean in terms of our activities in Western Balkans? I mean, we are primarily investment banks, and we are primarily to support the private sector. What we're trying to do is to establish, to promote more renewable energy in the region. Well, I do understand that, when we say renewable energy, there are different reactions in this region. For example, I understand there's a little bit of controversy, for example, in establishment of small hydropower plants. Of course, when we support these renewable energy projects, we would ensure that best international standards are adopted. Now, what is so different nowadays when we talk about renewable energy? I think we all should acknowledge the fact that technological change has made renewable energy, for example, solar and wind, very, very affordable. It is quite competitive now. So we need to really make sure that the countries actually consider these as an option, alternative to the thermal energy. Now, when we think about thermal energy, we also understand that in many of the Western Balkan countries, the source is lignite fuel or coal. There's a lot of coal power plants. What we would like to promote is for the authorities to actually consider perhaps closing down these thermal power plants and replace them with renewable energy. But to do so, there is a serious challenge. We acknowledge that. There's a question about what to do with the workforce who are engaged in coal mining. Here, we would like to combine with the concept of just transition. As you know, European Union has established this concept. They have established specific funding for the European Union countries. We would like to also consider, developing a comprehensive plan that also look at how effectively we can redeploy the employees of these coal mines that might be affected into different and more different opportunities by retraining, reskilling, and also not just the coal mine, but also look at the more regional economy that are linked to the coal mining activities and really analyze what the impact could be and also consider necessary reskilling opportunities there. So greening also could be that we would be looking at energy efficiency of buildings, industry, but our main focus, the top of our agenda, is to really promote renewable energy in the region. Now, we also would like to focus on digitalization. I mean, Jasmine mentioned that that this is really important, and what we are still investigating, but I think there are several strands. For example, we need to make sure that there are enough human capital that understand what is digital. Maybe I do not belong in that generation, but we nevertheless, we need to make sure that people are aware what does digitalization mean. That not only relates to the private sector, because Jess mentioned a lot of companies, during the COVID crisis, a lot of companies actually started using web to do their business. But digitalization it's not just about, selling their products through internet. It is really about integrating your whole business to go digital, that you understand what the stock, what is your stock, what is your, inventory, what is your, what is the demand for your product, where are the market opportunities, all these business information to be integrated into one system. And I do hear from businesses that there are not many businesses who are actually aware of the depth that digitalization could go. So that's one thing. The other thing is, the government could also go digital. And we are promoting e-government. But again, here, I think you really need to be determined to be able to, again, ensure that different government systems are connected. And it is a big effort. It's not something that you could just buy a product and do it. You do really need to make sure that it can operate in accordance with what you would like to see. Now, on the ICT side, I had really interesting discussion with the ICT Sector Association in one of the countries in the Western Balkans. And what struck me was that how this sector that actually, especially servicing, servicing export markets, meaning that the companies are not really targeting the domestic firms as their client base, but really developing programs to be sold, overseas, and how these companies have grown exponentially, and on top of that, they really do need more human capital that they could employ. So, again, going back to the human capital side of story, I think we need to think of how we could support the education system to be able to have more people who who can work in that segment of the economy. Let me stop here.
I do have a small follow-up. You mentioned a very important topic, which is what's happening in the commercial banking sector. You mentioned that NPLs are currently look steady, no signs of further worsening, but you also mentioned that this is all subject to moratoria that is currently being applied. So my question to you is, since everything is changing and new risks of investing are going to happen, savings are up, the issue is really, how will they manage the risks, and how will they manage the new investment in the new environment once moratoria are lifted or removed?
Well, I think, my impression is that talking to several of the regulators, not all, my impression is that the regulators actually really learned their lesson from the 2008 crisis. So the banking regulation compared to that period has strengthened a lot. And they are really scrutinizing the asset quality of the commercial banks. And so the message there is that, that's really good, so let's keep on, scrutinizing and try to do stress testing, and also making sure that to make sure that the quality of the assets within the banking system is sound. I mean, so. But for are you asking for the banks what the bank have?
I'm just asking what will be the EBRD response in dealing with the commercial banks, given those complexities that are likely to take place in the coming months and years. How would you, because all the parameters are changing, and so the perception of risk, getting rate of return on green investment and knowing the risks and so forth is very different from getting your standard investment projects appraised and evaluated and financed by the banks. So the question is, how do you adjust your procedures in order to be able to stay ahead of the game?
You mean EBRD's lending procedure?
EBRD is setting standards in doing many things with commercial banks, and this is an important side of the equation.
No, I think we have, I mean, you do ask very challenging question probably for risk officers to really respond to, but we are actually quite conservative, and one of the actually criticisms is that we're too conservative, EBRD as an institution, in terms of assessing risks. But so alternative to, of course, lending is that we do equity investments, and that's where we can take more risks. and we are trying to step up our equity investments.
Precisely.
Yeah.
But that actually puts you in a more active role in basically helping banks adjust to the new situation, right? Through equity investment.
It's for commercial banks.
Yeah.
As I said, commercial banks, I think, in this region are, pretty much well capitalized. So I don't think that there is an immediate need for more capital. But of course, should the demand arises, I think we would look at it.
Okay, good. I'm asking this to kind of spice up the discussion. We have 10 minutes, 9 minutes left. So let me pick up here and ask Sebastian. I know that he has ready answers for all the situations from following up from the policy coordination instrument for Serbia. But looking at the broader picture, what we have seen is a change of the way fiscal and monetary policy are being conducted. The fiscal policy was being asked to step in and provide support. And the monetary policy is actually being lured in to support this through many instruments. And in some countries with low, zero, or negative interest rates, were even engaged in sizable asset purchasing, which is one of those areas that were considered policy very non-standard or risky. So my question is, how do we handle the fiscal exposure that is happening, rightly so, now, once this is over? And B, what is going to happen with the demonstration effect of the essentially something that used to be used in this country during socialism time, which is you print money to finance government bonds, essentially monetize government deficit. How do you manage this in different circumstances, staying kosher, and basically bring this back to a manageable flow of fiscal and monetary policy going forward?
Yeah, this is a very, very good question, and I think the answer is that there is no one answer for all countries that fits all countries, right? It really depends on the countries you are talking about. I mean, one thing is our advanced economies, and the possibility advanced economies have to enter into unconventional monetary policies is different from what emerging markets can do. But we have seen indeed during the pandemic many emerging markets going into unconventional monetary policy side. And including into having central banks purchasing government securities. But in emerging markets, I mean, this has been done, and Serbia is one example, this has been done in secondary markets in the context of, open market operations and with a view to continue to provide liquidity into this government security, government bond market. And going forward, I think I would say that the main priority would be I mean, the very short run, I fully share the view from Jasmine about the need to continue to provide support to the economy, right? To make sure that this stimulus is not withdrawn too early, prematurely. And in that sense, some of the measures implemented here in Serbia on the financial sector side and in the fiscal front with the supplementary budget are welcome, at least broadly in broad terms. But once the recovery is fully entrenched, and once we see that output is reaching potential and the output gap is closing, certainly fiscal policy, we need to again start looking to rebuild buffers and policy more general, right? And that's why I also share Jasmine's view that in case there is a need for further support to the economy, and in particular to some sectors, that any further fiscal support should be well targeted to those companies and households in needs. But here, regarding the need to rebuild policy buffers, I think key consideration and the key policy recommendation is the need to put in place a new set of fiscal rules in Serbia, right? So the fiscal deficit has increased to broadly 60% of GDP. The deficit for 2 years in a row will be over 7% of GDP. So it's very, very important, not just let's say for sustainability dynamics, but also as a signal to investors and to credit rating agencies to make sure, to have this signal. Yeah, we are providing support in the short run, but we do have this medium-term fiscal path that ensures fiscal discipline and fiscal sustainability. So that's why I mentioned the importance of introducing a new fiscal rule that would ensure public debt coming again into a downward trajectory. And this, of course,
is convincing everybody that it's under control and it's well managed.
Exactly. That this is not; these are temporary measures, and in that sense, I think it's important to point out that most measures, most fiscal support measures in the case of Serbia are temporary. We haven't seen we haven't seen structural increases to spending.
We have to stay within limit. Both you and Jasmine mentioned something that has a lot of content, but easier said than done, which is better targeting fiscal support. So the initial round of doing essentially a blanket type of fiscal support was acceptable throughout the world. Now we're getting to a stage where we have to provide support to those that are really strategically deserve that support that is going to be on the path of recovery, and that is going to be supporting viable companies. You don't want to support what is called, companies that are not viable, zombies that are now. So question is, we know it's hard, but the issue is before you do that, there are huge political economy issues. It's, blanket support is perhaps not well targeted, but it's easy to do politically because flat support is easy. Targeted support is much more difficult. So what is your reaction, 1 minute reaction to how do you target?
Should I start? I can start. So one important consideration here is the need to ensure that you have very good social assistance program. I'm talking about support to households now. Mm-hmm. So as Jasmine mentioned before, most of the support has been channeled through universal cash transfers, even and also through some of the well-targeted social assistance program that exists in the case of Serbia, at least. You have the financial assistance program, the child allowance, which are well-targeted. So they go to the poorest households, but the coverage is limited. So one specific recommendation there is to increase the support, but also enlarge the coverage to make sure that a larger share of the poor households are reached by this financial assistance program. In the case of support to corporates, I think in the supplementary budget...
SMEs rather.
SMEs. Mm-hmm. I think the supplementary budget included measures that were much more targeted than the first round, mm-hmm. Indeed. For example, the new state guarantee scheme for bank loans to SMEs and for small micro companies only targeted or channels credit to...
The state guarantee fund can be used as an instrument.
And it is, exactly, to those companies that are most in need. And also, direct support to those sectors in need, for example, hospitality, transportation, and
precisely, those are the most hit.
Exactly.
And are likely to recover as soon as the crisis is over. Jasmine, your comment on targeting. We cannot hear you.
Okay, can you hear me now?
Now, yes.
Yes, I agree with what Sebastian said. I think having very clear criteria, either for the size of the company, the sector, or in terms of the household support through the social assistance programs, I think that's going to be key. And I think it's an incentive to, if the data is not available right now, to ensure that over time and preparing for the next crisis, this information is available and the access for households and companies is available. So I think in some countries, the support to firms, for example, was more blanket than in others. I think a lot of countries in the region had criteria for the size of the company, focusing on MSMEs, for example. Some countries also had specific sector coverage. So some of this was already done, but I think it needs to be further, I think there will be a rationing and it needs to be further refined maybe. On the zombie companies, I think this is going to be a big issue in terms of, and I think we won't really know until the support is withdrawn. And I think we will need to learn lessons from this crisis for the design of future programs, in terms of minimizing the amount of support that goes to zombie companies, of companies that aren't otherwise viable, right? That only survived because of the support that the governments provided. So I think it'll also be important to really look back to what was done this time, to learn lessons and apply those going forward and make sure that the systems are set up in a way that can respond to that next time.
Thanks a lot. We are out of time, so I'd like to thank Jasmine, thank Rika, thank Sebastian for participating. I think that we covered a lot of ground, many questions that we did not manage to answer, but at least we put them openly, and hopefully the further panels here could be in a position to better reflect on these, and perhaps we can take this up in our future AAA and lending program discussions and debates. Thanks a lot. See you in the next panels. Thank you.